Hello and welcome. You tune into Market Cafe with me, Ankita Saxena, and with me, Shrishti Sharma. Good morning to all our viewers, and this is the show where we will get you all the cues that you need to keep on your radar, and of course, all the global markets and how they have moved. But first up, let's take stock of how the US markets fared on Wednesday. Now, remember, yesterday was a market off for the US market on account of New Year. But on Wednesday, we did see some cuts coming in as far as Dow Jones is concerned. We saw Dow Jones end in the negative territory with cuts of 0.6%. The S&P 500 also moderated to 0.7%, and Nasdaq also gave up gains, and that also saw cuts of almost 0.7% coming in there. The markets really pulled back on Wednesday, though the index still closed out on a bumper year. Now, remember, US markets have been sitting on record high levels, but in the last consecutive 4 sessions, we have been seeing a bit of a profit booking that's coming in towards the year end. But nonetheless, it was a bumper year as far as the US markets were concerned. The stocks also posted a 4-session losing streak, like I mentioned. Although the declines were mild, S&P still locked in a 16.39% gains for the year. It's the third straight double-digit annual advance that we saw in S&P 500, and Nasdaq Composite, of course, rode on the AI enthusiasm to a 20.336% advance, and the Dow Jones advanced 12.9% in 2025. So clearly, US markets have, Shrishti, outperformed the Indian markets. Indian markets have been net underperformers, but US markets had a bumper year.
Absolutely, Ankita, and yes, of course, the AI bubble is, or rather the AI boom is something that the markets are talking about. But with this, let's move on and let's shift focus to what's happening within the commodity world then. And as of now, we are finding a bit of a stability kicking in with respect to the Brent oil prices, but with a tinge of red as of now. Brent crude is hovering around that $60.5 per barrel mark, is below that $61 per barrel mark, and having a cuts of almost 0.7%, and similar sort of a fall is what we are getting to see on WTI futures as well, but not much of a decline, and don't think that there's something to be really perturbed about.
All right, so that's where the crude is perched at. But let's move on and get you more news on the global front. China's top EV maker BYD has posted its weakest sales growth in the last 5 years as domestic consumption intensifies. Also, full-year sales rose just 7.7% in 2025, while the December sales fell for the 4th straight month. And the chairman flagged a weakening technology lead, with rivals like Geely and Leapmotor gaining ground, especially in the budget EVs.
All right, moving on to another story then, and at least 40 people were killed and over 115 injured after a fire tore through the packed New Year Eve's bar in Carnes, Montana. The blaze broke out shortly after midnight at the Lee Consolation Bar, triggering scenes of panic as revelers tried to escape, and authorities say that the cause is still unclear, but there's no indication of an attack.
And several people have been reportedly killed as protests over worsening economic conditions escalated across Iran. Unrest erupted after rallies against the falling currency and rising prices spreading to multiple provinces. Iranian media says clashes broke out at police stations with vehicles set ablaze.
All right, moving on to another story then, and Zohran Mamdani has been formally sworn in as New York City's 112th mayor. He is the first mayor of New York to be sworn in on a Quran. Now, Mamdani had earlier said that his swearing in marks the beginning of a new era for the city that puts working New Yorkers front and center.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll get you more updates on the other side. Stay tuned. Welcome back. You're tuned into Market Cafe with me, Ankita Saxena, and with me is Shrishti Sharma, and we're taking you through all the cues that you need to keep on our radar before the start of our D Street. But for that, let's take quick stock of how the Asian markets have opened up. Now, remember, South Korea has hit a record high today as Asian Pacific markets have kicked off a new year with very mixed signals coming in. Kospi was up 0.2%, and remember, they have hit their record high of 4,239, and we are also waiting out for inflation data that's going to come out from China later in the day, as well as the interest rate decision from the Federal Reserve. Also, some of the Asian markets are still closed for the holiday, including Japan and mainland China. So those markets are shut. But South Korea's market will open an hour later at 10 a.m. local time. As of now, Australia's ASX 200 is marginally down. If I look at where it's perched at, it is actually very, very flat right now. It's trading with cuts of 0.02%. So very flat moves coming in as far as the Australian markets are concerned. Singapore's also came out with a macro data. The economy expanded at 5.7% on a year-on-year basis for the fourth quarter. And that was driven by strong manufacturing growth in the month, through the month of December. And so that's the data that's coming in on the Singapore markets. And largely, we have, of course, Japan and China that's shut, but very mixed signals. Kospi is, of course, sitting at record high, but Australian market right now is very, very flat. So that's how the Asian markets have opened up. If we can pull up the charts for Nifty also, the implied start for Nifty, we do have GIFT Nifty that's sitting very, very flat moves, 34 points of an uptick that we see coming in on Nifty as well.
All right, so let's watch out for that, that how GIFT Nifty gives more signals to our markets as well. But just yesterday, it was quite an interesting day because, yes, of course, the index was seen to be consolidating after a good run-up on that 31st of December 2025. But along with that, there was a lot of sector-specific action. So let's get that roundup, and Snehi is joining us with just that. Snehi.
Well, yes, the first trading session of the new year 2026 was as flat as ever, 26,146, so close to the 26,150 mark is where we were absolutely flat on the benchmark. Similar move for Sensex. Nifty Bank did pretty okay for itself, up 0.2%. You had the broader end of the market also that saw tides turning. The mid-cap index soared higher and outperformed the breadth of the market. The mid-cap index was up by about 0.5%. The small-cap index was absolutely flat under some pressure. But in terms of the top Nifty gainers, it was Shriram Finance, which reached a fresh all-time high after 2.75% uptick over there. Bajaj Auto on the back of very strong auto sales numbers. NTPC, Eternal, Wipro, M&M, L&T, all of these were the top gainers. On the flip side, of course, how can we not talk about ITC, the top Nifty loser, a close to a 10% cut on that stock on an intraday basis alone on the back of higher than expected excise duty announcement by the government on tobacco products. That was the reason why some other names like VST Industries as well and Godfrey Phillips were under pressure. Dr. Reddy's, Tata Consumer, Bajaj Finance, ONGC were some of the top Nifty 50 losers. Sectorally, it was through and through the day of the auto stocks. Stellar performance from the auto names in the month of December. All stocks either in line with expectations or better than expectations. No company reported numbers below the street estimates. So you had names like Ashok Leyland, Bajaj Auto, Motherson, M&M, TVS Motor, Hero Motor that did very well, gains anywhere between 1 and 3.5%. On the flip side, big cuts coming in on Nifty FMCG. You had names like United Spirits, Radico, Tata Consumer, UBL. These were some of the top losers. Following auto, big gains came in realty, metal, IT, PSU banks and energy. Nifty Bank and Media were absolutely flat. Some pressure coming in on the pharma index. Overall, it was names like Transformers and Rectifiers, another 7% uptick over there. Ajanta Pharma, Finolex Cables, AB Sun Life, Adani Total, JSW Energy. These stocks did very well. And on the flip side, some pressure, of course, on Godfrey Phillips and ITC. But following that, you had Deepak Fertilizers, KPR Mills, Aether Energy and Intellect Designs. These were some of your Nifty top 500 losers. So that is how the first trading session of the calendar year 2026 fanned out, absolutely flat.
All right, thank you so much for that, Snehi. But hang in there, also take us through all the cues that we need to watch out for before the start of D Street today.
Well, yes, lots of cues to watch out for, and more importantly, some macroeconomic indicators to also watch out for. So let's start by talking about the action back home. Keep a close eye on the HSBC India manufacturing PMI numbers coming, and of course, it being Friday, weekly forex data numbers will also be on our radar. Globally, you will have the global US and UK manufacturing PMI numbers from both of those major economies. From Eurozone 2, the global Eurozone manufacturing PMI numbers will be out. Japanese markets continue to stay close. But shifting focus back home once again in terms of corporate action and board meetings, watch out for the stock of MCX. That stock is going to be trading X stock split in the ratio 1:5. So watch out for how the street adjusts to that stock. And the recently listed Corona Remedies, that IPO made its re-street debut very recently, and its Q2 earnings will be out. So watch out for that as well. Lastly, in terms of some other stocks to watch out for, keep a very close eye on names like HDB Financial Services and Allied Blenders, because significant chunks of equity will come out of their lock-in period for both of these stocks. For HDB Financial Services, it's a 6-month lock-in that's going to be ending, a 58% chunk coming out of lock-in, and it's a very significant amount in terms of if you calculate it in crore terms. But Allied Blenders to a 1.5 year and beyond lock-in opening, 20% equity hits the market once again. So watch out for volatility on these names. But yes, watch out for all of these cues.
All right, thank you so much, Snehi, for getting us all those details. But with this, let's also tell you which are some of the counters that you should be watching out for in today's trading session. And first up, let's talk about Hyundai, because the company has come out with its December sales data. And this time around, we are getting to see an inline set coming in by the company, wherein the company sold total sales of 58,702 units, and that's a jump of 6.5% on a YOY basis, while there has been a mild disappointment versus the estimates, but not that bad. So we are getting and keeping this particular counter in an inline set along with all the other passenger vehicle companies, which did not disappoint as well. Other than that, it is MOIL that is going to be in focus, as well as the ferro grades of the manganese ore and above have been increased by 3% over the December rates, while the ferro grades with manganese content below 44% have been raised by 3% from the same date. So let's watch out for this counter. Bansal Wire Industries have come out with their sales volume data for the Q3, wherein they say that the total volume for Q3 has seen a jump of 32% on a YY basis, while sequentially the growth was at 6%. So good set coming in from Bansal Wire. Electra Green Tech will be in focus as well on the back of a positive news flow, where we get to see that the company did come out with an announcement of commercial operations beginning for one of their plants. The company has commenced the phase 1 of its greenfield electric manufacturing facility in Hyderabad, and the phase 1 operation will bring an annual per shift production capacity of 2,500 electric buses, and this represents 50% of the planned per shift capacity of 5,000 of buses to be produced from this plant itself. So positive news flow over there. Aurobindo Pharma as well will be in focus on the back of a positive news flow, where we get to understand that the subsidiary acquires Khandelwal Laboratories, that's a non-oncology prescription business, for 325 crores. Now, the acquired business includes 23 brands marketed across 67 SKUs and 9 pipeline products. So good investment over there. And let's also talk about Railtel. That will be in focus, as the company has received an LOA worth rupees 57 crores from Assam Health Infrastructure Development and Management Society. And lastly, stocks like HBD Financials as well as Allied Breweries will be in focus, as the lock-in of these newly listed counters will be getting over. But for HDB Financials, it's a 58% lock-in that will get over today, while for Allied Breweries, it will be 20%. So let's watch out for these counters. But Ankita, I'm sure there are lots more.
Absolutely, Shrishti. There is a whole host of other counters that will be in focus today. Let me take you through all of those. First would be Sapphire Foods and Devyani International. Remember, Sapphire Foods India is going to merge with Devyani International, and that will be effective from the 1st of April 2026. The share swap ratio is going to be 177 Devyani shares for every 100 Sapphire shares. So that's the share swap ratio. So those are the counters that we will be watching out for. And besides that, we also have some business updates that are coming in from for Punjab and Sindh Bank. So the business updates look positive here. The total deposits have ticked up 9.3% on a year-on-year basis, and the gross advances are also up 15.3% on a year-on-year basis. We have Indian Bank also that has come out with its business updates. The gross advances are up 14.5% on a year-on-year basis, and the total deposits are also up 12.5% on a year-on-year basis. So looks good for Indian Bank as well. We have South Indian Bank as well coming out with its updates, with gross advances up 11.3% and the total deposits also up 12.2% on a year-on-year basis. So all of these banks, the business update look good and positive. So we will be watching out for the banking counters as well. Besides that, we also have the auto sales data that came out. We had Hero MotoCorp that posted its December auto sales above set of numbers that came in for Hero MotoCorp. Whatever we were expecting, we did see the total sales that were up 40% on a year-on-year basis. The domestic sales were up 30%, and the total exports also stood at 37,236 units, up 17% on a year-on-year basis. So good set coming in for Hero MotoCorp. And besides that, we also had other auto names. We had TVS Motors also posting its numbers. Again, good set coming in above what we were expecting. We did see the total vehicle sales that was up 50% on a year-on-year basis, and the two-wheeler sales was also up 48% on a year-on-year basis. So good set coming in for TVS Motors as well. So these are the banking and the auto names that we will be watching out for in today's trading session.
All right, so a lot of stocks to watch out for, but with this, it's time now to slip into a very short break. Don't go anywhere, we'll be right back on the other side. Welcome back to Market Cafe right here on ET Now, and let's move forward with another story. And GST collections did rise to 1.74 lakh crores in the month of December, up by 6% on a YOY basis and marginally on the month as well. However, it is still away from its peak of 2.4 lakh crores seen in April this year. Let me take it across to my colleague Prakash, who is joining us with the latest. Prakash.
Well, the Finance Ministry has come out with the monthly GST collection numbers for the month of December 2025, which is second month full-fledged GST collection number since implementation of next generation GST reforms from September 22, 2025. A very significant development coming in. In fact, there is a subdued growth in GST collection numbers in December. As per the data released by the Finance Ministry, gross GST collections stand at rupees 1.74 lakh crore. Which is up by 6.1% compared to rupees 1.64 lakh crore in the month of December 2024. Slow growth in GST collection in December due to subdued growth in revenues following massive tax cuts under GST. Gross revenue from domestic transactions rose 1.2% to rupees 1.22 lakh crore, whereas refunds were up 31% to rupees 28,980 crore in December. Similarly, net GST revenues stood at rupees 1.45 lakh crore, increased by 2.2%. We are expecting that the GST collection numbers to improve in 2026 on the back of multiple reform measures, improved compliance, and expected higher consumption.
All right, moving on then, India moves a step closer to its bullet train ambition. Railway Minister Ashwini Vaishnav has announced that the first operational stretch of the Mumbai-Ahmedabad bullet train is projected to to be ready by 2027. Now, 15th of August 2027. Now, the initial section will run from Surat to Bilimora, marking the first high-speed rail service in the country. The Railways Ministry has further indicated that the entire Mumbai-Ahmedabad corridor is planned to be completed by 2029. Let's go across and listen into what the Railway Minister had to say about this.
पहला सेक्शन है सूरत से बिलीमोरा ओपन होगा, उसके बाद में वापी से सूरत ओपन होगा, उसके बाद में वापी से अहमदाबाद ओपन होगा और उसके बाद में ठाणे से अहमदाबाद ओपन होगा, फिर मुंबई से अहमदाबाद होगा। ये वन बाय वन सीक्वेंस। हाँ, अंडर बता सकते थे 2027 का अगस्त 2026, 15 अगस्त 2027।
All right, and moving on to another story, and sources tell ET Now that gig workers strike had a negligible impact on the companies, wherein Zepto and others claim operations remain normal. Let me take it across to Anjali, who is joining us with the latest and more details on this particular story. Take it away, Anjali.
In a fresh update on the impact of the gig workers' strike on New Year Eve, Dipinder Goyal, the founder and CEO of Eternal, has posted on X that there was no impact despite the calls for such a strike. The food delivery platform and the quick commerce platform Zomato and Blinkit collectively posted 75 lakh per orders, which is plus orders, which is in fact an all-time high for these platforms. And he said that 4.5 lakh plus delivery partners were available on the ground who delivered these orders to 63 lakh customers during the day, negating any impact that a strike may have had. In fact, he also said that this happened without any additional incentives for delivery partners. Now, remember, Zomato did roll out some additional incentives for delivery platforms on New Year's Eve, but as Goyal claims, this is equivalent or in trend with previous New Year evenings and was not a response to the call for the strike at all. That is what Goyal is claiming. However, a different story is being told by the union workers, as we reported earlier, that they're saying that over 2 lakh gig workers participated in the strike, and a vast majority of orders were impacted, and they've even detailed out the cities like Hyderabad, Delhi, Kolkata, and the state of Rajasthan, where a big impact was seen. That is what the union workers are saying. But as we've heard from sources previously as well, that the impact has been negligible. There was low participation from the gig workers in this particular strike, because of which no real material disruption was observed on the quick commerce and food delivery platforms. And now this tweet from Dipinder Goyal also confirms this, or says the same thing, that according to quick commerce and food delivery platforms, there has been negligible or no impact of these calls for a strike.
And well, as the Gig Workers Association versus delivery platforms debate rages on, Zomato's founder Dipinder Goyal has tweeted, and I quote, "Our 10-minute delivery promise is enabled by the density of stores around your homes. It's not enabled by asking delivery partners to drive fast. Delivery partners don't even have a timer on their app to indicate what was the original time promised to the customer. After you place your order on Blinkit, it is picked and packed within 2.5 minutes, and then the rider drives an average of under 2 kilometers in about 8 minutes. That's an average of 15 kilometers per hour. I understand why everybody thinks why 10-minute must be risking lives, because it is indeed hard to imagine the sheer complexity of the system design which enables quick deliveries. Having said that, no system is perfect, and we are all here to make it better than today. However, it is far from what it is being portrayed on social media by people who don't understand how a system works and why. If I were outside the system, I would also believe that gig workers are being exploited, but that's not true." So that's the word that's coming in from Zomato's founder Dipinder Goyal on the entire row that broke out on the New Year's Eve.
All right, but with this, let's shift focus to the telecom sector then. And telecom operator Vodafone Idea has received 638 crores rupees GST penalty order. And in a statutory filing, Vodafone Idea said that it disagrees with the order and will take legal action against it. Now, the filing comes just a day after the debt-laden Telcom received a major relief on its adjusted cross-revenue dues. So that's the latest we are getting to see from Vodafone Idea. The stock is also quite very volatile, because just a couple of days back, it was almost 15% down. Just yesterday, it has seen an intraday jump of almost 7.5%. And let's watch out for this particular counter yet again on the back of this GST penalty announcement. But with this, yes, of course, the semiconductor industry, Ankita, seems to be in focus as well.
Absolutely, Shrishti. The semiconductor industry has actually presented a comprehensive wish list to the government, primarily focused on expanding the scope of support to cover the entire semiconductor ecosystem. Let's get on board Sumita, who's joining us with more details.
Absolutely. So exclusive sources tell us about the wish list that's been presented by the industry, by the semiconductor industry, to the Ministry of Information and Technology. In fact, sources tell us that the industry has asked for ensuring the continuity of ISM 2.0 and DLI schemes with enhanced fiscal support for semiconductor and OSATs. In fact, if you remember, ISM 2.0 had to be introduced last year. However, discussions and deliberations have been going on, and we're given to understand that ISM 2.0 could have separate quotas and manufacturing incentives. It is going to be focused on an overall ecosystem play. But what else has the industry asked for? Well, higher budgetary allocations for approved projects and a simplified time-bound pari passu payout mechanism. They've also asked for reopening and extending the 15% concessional manufacturing tax regime. This is to include semiconductor fabs, electronics components, and advanced manufacturing units, with the eligibility window extended by another 5 years to align with projects and their commissioning timelines. In fact, we are given to also understand that one of the asks remains that exports should be strengthened by way of incentives for benefits that are linked to domestic value addition instead of just pure volumes. They've also asked for a simplification of testing and certification frameworks and rationalization of testing and certification fees. Along with that, the industry has asked for enhanced talent development and R&D funding as well. And last, of course, but not the least, that the industry has asked for development of integrated semiconductor and electronics parks. They should have plug-and-play infrastructure to enable faster project execution and a holistic ecosystem development.
All right, thank you so much, Sumita, for getting us all those details. But now let's talk about the financial space, because in the Financial Stability Report by RBI, they have flagged rising insurance commissions as an emerging stress area. The RBI says that the commission growth is outpacing the other cost, especially at private and life insurers, warning that the aggressive commission-led growth could weaken the underwriting discipline. Let me take it across to Anurag Shah, who joins in with the highlights. Anurag.
Interesting observation by Reserve Bank of India's FSR report related to insurance distribution cost and insurance commission structure. So RBI has flagged that rising insurance commission as an emerging stress area. In FSR report, RBI has mentioned, and private insurers sees sharp rise in commission payout. Other than that, premium growth is increasingly driven by high cost distribution strategy. So that has been pointed out by RBI's FSR report. Rising commission could weaken the underwriting discipline, that is also mentioned in FSR report. Non-life insurers, general insurance companies and health insurance companies also see escalation in commission expenses. So we have seen that in the recent Insurance Act Amendment Bill, Sabka Bima Sabki Raksha, IRDA is more empowered to decide on commission reward and other expenses. So in RBI's FSR report also, RBI has found and made remarks that insurance companies are increasingly focusing on high distribution costs to acquire business.
And moving on then, SEBI has barred 26 individuals from securities market from trading over allegations of price manipulation in small and medium enterprises stock, a DU Digital Global case. Now, the market regulator has imposed penalty of 1.85 crore rupees on 26 individuals and barred them from market for the next 1 year to 30 months. My colleague Ankur Mishra is now joining us with the details of this story.
Yes, market regulator SEBI has taken action on 26 individuals in DU Digital case. Now, this is an SME stock which rose significantly in a specified time period. SEBI action says that there will be disgorgement of 98 lakhs as an illegal gains and also a penalty of around 2 crore for 26 entities. But more importantly, SEBI has given few facts which are interesting, whereby SEBI has said that DU Digital script surged from just rupees 12 to whopping 296.05, and this period was from August 2021 to November 2022. So almost more than a year period, the stock rose humongously, and thereby the action was taken by market regulator SEBI. SEBI has found that deceptive trading strategies were there by connected traders, and coordinated trades led to artificial price and volume manipulation as per SEBI, and therefore some entities are penalized earlier also was found involved in the price manipulation. So SEBI has been taking actions on SME script and SME price manipulation, whomsoever was responsible, and this has been there for past 2 to 3 years. And now one more stock is there in the list, which is DU Digital. Now DU Digital actually listed on NSE SME platform in August 2021, and however no corporate announcement SEBI has found to justifying humongous 2,467 price surge which happened in the stock.
All right, thank you so much, Shankar, for getting us all those details. But talking about the steel sector then, because that's one of the spots which has been buzzing off late on the back of a positive news flow. As the steel capacity in India is expanding, quotes Sandeep Pondrik, Steel's secretary, he says and talks about the demand and the consumption pattern that is panning out to be happening in India. And of course, that's the whole safeguard duty that has been in focus as well. We spoke exclusively with Sandeep Pondrik. Let's take a look at that.
Initially, provisional safeguard duty was imposed by the government in March, which got over in November of 2025. It was at the rate of 12% on certain products, certain steel products. And then DGTR in the meanwhile had conducted a thorough investigation, and it recommended that a range of safeguard duty, that is 12, 11.5 and 11%, should be imposed. After investigation, the DGTR found that there was unreasonable damage to local or Indian industry because of the imports, cheaper imports. Domestic steel prices are quite low. If you actually see the prices for both flat and long products, we are seeing some upward push in December as the demand increases a bit. We also have to look at it from the capacity versus demand point of view. It's not only imports which are affecting the prices, because the capacity, steel capacity in the country is increasing significantly. So if you see the steel capacity, total steel capacity, it was 200 million tons at the end of FY25. And in this financial year alone, we have added 18 million tons of steel capacity. So the capacity is increasing much faster than the demand. Though the consumption in the country is also increasing significantly, we are the only country in the world where steel demand is increasing.
Moving on then, the objective of the listing of Coal India units in value unlocking says Rupinder Brar, who's the Additional Secretary of Ministry of Coal. She also adds that the Coal India is looking at other sources of energy like solar. Let's listen in to what she had to say.
One of the larger objectives is value unlocking and also speeding up production, looking at the best collaborations of the public and private partnerships in making sure that India becomes Atmanirbhar in all its energy needs. Coal India is also looking at the other sources of energy, which includes solar, the PSP, and we are working continuously towards that. We have targets for the company, and these are also continuously monitored to make sure that there are no slip-ups, and the mix between the renewables and the more conventional sources is continuously being looked at to make sure that we meet all the national as well as the global targets.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back. Welcome back. You tune into Market Cafe, where we're getting you all the updates before the start of D3, all of that you need to watch out for. And well, India's QSR space has kicked off 2026 with a blockbuster merger, Sapphire Foods, which will be in focus today, as well as Devyani International, because Sapphire Foods will merge into Devyani International via a share swap, creating one of country's largest quick service restaurant platforms backed by Yum. The deal will boost scale, synergies and faster expansion across brands like KFC and Pizza Hut. My colleague Snehi is now joining us with a snapshot of what this deal is going to look like.
Well, yes, so the first big merger announcement of 2026 has been served, and it's the Devyani International and Sapphire Food merger. Long time coming for this merger announcement. And let's understand what the contours of this deal are. The merger is going to be executed via a share swap, and Sapphire Food India is going to be merging with Devyani International. The ratio here is 177 shares of Devyani International will be issued for every 100 shares that a shareholder owns in Sapphire, which implies that the trading multiple is at 1.7x. The deal is subject to customary approvals, and the appointed date proposed for this merger is 1st of April of this year. Both registered offices will be shifting to Haryana, and 74% of the revenues of this combined entity will be driven from India as well. Let's understand what some of the brands are that fall under both of these brands. Remember that Sapphire Foodworks is a play on the Yum brands in India. So these are some of the brands that they own. KFC, Pizza Hut, Taco Bell from the Yum brands of group comes under Devyani. Other than that, they also own Costa Coffee and Vango. And for Sapphire Foods, it's KFC and Pizza Hut. So that is something to watch out for. Let's talk about the scale play over here. This is going to be creating one of India's largest QSR companies. Pan-India operations will be seen across cuisines, formats, strong brand balance sheet for faster expansion will be enabled, and wider investor base and better stock liquidity is something that we are expecting to watch over here. So now let's talk about what the Yum angle over here is. The Yum brands is fully supportive of the merger. India is seen as a priority growth market for them, and under this deal, Devyani is going to be acquiring 19 Yum-run KFC stores that Sapphire runs right now in Hyderabad. The whole point of this deal is that since both of these companies operate the same franchisees under the Yum brands of Pizza Hut and KFC, the whole point here of the merger is to consolidate the supply chain to ensure better efficiencies for both of these brands. So let's talk about what the merged revenue mix is going to be. India, 74% revenue will be driven by India for the combined entity, rest 26% coming from international. Talking about the timeline check, this is going to be effective post the NCLT note. 12 to 15 months will be taken for the completion. Full integration benefits will be seen over 2 years, and the potential or the synergy unlocking that will happen over here is between 210 to 225 crore is what both the companies say in terms of the steady state value, in terms of what the supply chain value unlocking is going to be here, and full realization of the same is expected to be seen within 2 years. Let's talk about what the growth menu is like over here. This is the whole point, is to expand the KFC footprint, strengthen the Pizza Hut turnaround in India, and scale non-Yum brands portfolio. Now the big question is what happens to the existing shareholders or promoters rather of Sapphire India. So for Sapphire promoters hold 23.35%, out of which Arctic International is going to be buying out 18.5%, and the balance is going to be 4.5 to 5% is going to be swapped for Devyani shares. Understanding what the combined store count is going to look like, 3,000 odd stores combined between the two entities, combined revenue of 7,826 crores. These are all the financials provided by the companies. EBITDA margin of roughly 17%, and total borrowings, total debt on the books will now come to 951 crore rupees. Just understanding what the valuations here are going to look like based on the current market price and what the synergies are in terms of the share swap ratio, this deal seems fairly valued. Talking about the market cap of both of those companies, this would imply that the swap ratio is fair for both the stocks on the current market price. Both stocks, remember, have gone up in the last 1 month but have run down significantly in the last 6 months. The merger is going to be seen as a consolidation in a slow growth segment for KFC and Pizza Hut. So if you take a look at the FY27 combined profit estimate based on how both companies have done this year, it's going to be roughly 100 crore rupees, calculated EPS of half a rupee per share, implying a 270 price to earnings forward looking. That's FY27 for both of these companies combined, and 1 year forward EBITDA of 20.6% for Devyani and 16 times, 20.6 times and 16 times for Sapphire. So watch out for this deal, but yes, it seems like a fairly valued deal to be of great advantage to Devyani.
All right, and otherwise the slower sector will now be consolidated in Devyani. Sapphire Foods will be merging into Devyani International on a fair valuation, and as far as the merger is concerned, it will be happening on, as Snehi mentioned, on back of a share swap, and 177 shares of Devyani will be issued for every 100 shares of Sapphire. So all the shareholders of Devyani International, for every 177 shares of Devyani that you have, you will be issued 100 shares of Sapphire. Also, this deal this merger will come through from the 1st of April 2026, and if we take a look at the brands that are under these companies, for Devyani International we have KFC, we have Pizza Hut, Taco Bell, and for Sapphire we have KFC and Pizza Hut, and these will be merged together now. But staying with Snehi, after a strong second quarter, consumption sector could also become sluggish in quarter 3. That's the word coming in from Kotak Institutional Equities. Staples show mixed trends amid GST transition, while the discretionary demand stays very uneven after an extended monsoon and a shorter festival season. But to give us a better lowdown of that, Snehi, take us through the details.
Well, yeah, so quarter 3 is expected to be slightly sluggish for the overall consumption space, both on the staples as well as the discretionary front. These are updates coming in, or expectations rather, from Kotak Institutional Equities, wherein they say that there's going to be mixed demand trends for staple, and the lingering effect of the GST cuts that we saw last quarter is still going to be playing out for some companies like HUL and Colgate. On the flip side, Godrej Consumer, Britannia will be starting to show early signs of growth pickup. Marico, Honasa and Tata Consumer are expected to post a good quarter, and they see the improvement in the overall category category EBITDA when it comes to the staple group of stocks. Let's talk about discretionary then. Jewelry, cigarettes are expected to remain resilient, but now that this announcement has come for ITC, let's see how this impacts the entire cigarette space. QSR, Paints, United Breweries will continue to remain under pressure. Titan, Pidilite, Varun Beverages will show resilience. Extended monsoon and short festive season is expected to hurt demand, and recovery is uneven across discretionary categories. But as is the case with staples, they also see an overall EBITDA growth in the discretionary category. Talking about QSR, we've just heard the big deal on Sapphire and Devyani, so we'll see what the impact is. But at least for Q3, demand has continued to remain weak and recovery remains fragile. Westlife India and restaurant brands that operates Burger King India are expected to post weak SSSG. Devyani and Sapphire to see SSSG declines as well. And Campus and Metro, these are footwear stocks, they're expected to do 10 to 12% growth on the top line. So overall, to sum it up, names like Titan, Pidilite, Britannia, Tata Consumer, Godrej Consumer, Varun Beverages, Nestle and Honasa Consumer are expected to have a good Q3, resilient show from ITC and footwear companies. And on the flip side, weak show from HUL, Colgate, UBL, Paints and the QSR group of stocks.
All right, Tasneem, thank you so much for joining us with the details for the consumption basket. But let's move from the FMCG space to the auto space. It is the beginning of another new year, a new month. And of course, we will have the auto sales data that we will be seeing coming out. In fact, we have seen a couple of companies that have come out with the auto sales numbers. And let's take it across to my colleague Shrishti, who's standing by with all the numbers. Shrishti, tell us what does the auto data looks like for the month of December?
Well, absolutely. December sales seems to be quite a robust month for the auto sales company, and like we have been flagging off, they do expect a double-digit growth all across the segment. But this time around, the commercial vehicle companies as well as the two-wheelers companies have surprised positively, and the numbers were way above to what we were expecting at ET. Now, on your screen, we have that scorecard because you can see companies like Hero MotoCorp, TVS, Escorts, they have done very well. But for most of the other companies, the set wasn't disappointing at all, or rather no company posted a number below the estimates. With respect to the commentary as well, we have seen companies from the likes of Tata Motors CV coming out with a positive commentary for Q4 as well, while most of the companies do expect a sustained growth momentum. Let's talk about the passenger vehicle industry then, because all across the board we have seen a double-digit growth, but it's Hyundai that has seen a jump of just 7%. The numbers were a tad below versus the estimates, but nothing to be perturbed about. 58,702 units is what the company has reported in the month gone by. Now, when it comes to the commercial vehicle industry, a double-digit growth and a jump of 25 to 27% in their sales data on a YOY basis is what we have registered. Yes, the commercial vehicle industry did not show quite a growth just after that GST rate cuts, but all across the last few months, we have seen very good set of numbers coming in, and like I told you, Tata Motors still expects Q4 numbers to be quite very good. Now let's talk about the two-wheeler pack, because TVS Motors and Hero MotoCorp did come out with their numbers post-market, wherein for TVS Motors the sales stands at 4.8 lakhs versus Hero MotoCorp where the sales stood at 4.6 lakhs in the month gone by, and both the numbers were way above to what we were expecting. And look at the jump on a YY basis. It's a 40 and 50% growth is what these companies have registered. And lastly, from the tractor companies, though they expect the sales momentum to continue in the times ahead, December generally is quite a low month or a seasonally weak month for the tractor companies, but they have performed better versus the estimates, and it's a 38 and 39% growth on a YY basis is what these companies have registered. So all across the board, we have seen very good set of numbers coming in from the auto sales. Back to you.
All right, Shrishti, thank you so much for giving us all the data for the December auto sales numbers. But with that, it's curtains down on this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in. Don't go anywhere because the market is coming up next.